What does it mean to be dependable? It means you do what you say you'll do time and time again. That's why the cattlemen of this great nation trust Ritchie to provide fresh water on demand. Ritchie, proud to be a partner to the American cattlemen since 1921.
Hello, I'm Troy Bockelmann with the CattleFax Closing Bell, brought to you by Ritchie Watering Systems. In 2016, we saw the feeder cattle imports from both Canada and Mexico decrease while Canadian fed cattle imports increased. Along with the U.S. expansion and decline in the U.S. cattle prices, Mexico continues to improve cattle feeding and harvesting efficiencies, and as a result, they are keeping more of their cattle south of the border. 2016 was the third smallest in the last 15 years for feeder cattle imports from Mexico, down 18% or nearly 195,000 head when compared to 2015. Mexico is forecast to increase the beef cow herd another 1.5% to 6.9 million head in 2017. As a result, the feeder cattle import numbers were smaller in the 2016 data. Of the feeder cattle coming from Mexico in 2016, only 10% of them were heifers. This is down from 13.5% in 2015 and 21% in 2014. Feeder cattle imports from Canada are following the same trend. In 2016, feeder cattle imports were down 39% or just over 110,000 head. Canada and Mexico are both forecast to continue beef cow herd expansion into 2017. Along with the larger availability of feeder cattle in the U.S., CattleFax expects the trend of fewer feeder cattle imports to continue into 2017. The decline in feeder cattle imports has been partially offset by fed cattle imports. Fed cattle imported from Canada were 42% or 90,000 head larger in 2016 compared to 2015. Total feeder cattle and fed cattle imports from Canada and Mexico were down 15% or 292,000 head from 2015. One reason for the increased imports of fed cattle from Canada, as opposed to feeder cattle, is the spread between the U.S. cattle prices and the Canadian cattle prices. In 2016, the spread between the U.S. and Canada 750-pound feeder averaged negative $1.25 when converted for currency, and in 2015, the spread was a positive $3.97 per hundredweight. This means that in 2016, the Canadian feeder cattle were more expensive to import than their U.S. counterparts, while the Canadian fed animal was at a $4.78 per hundredweight discount to the U.S. market. This discount in the fed cattle market in Canada encourages imports of fed cattle as opposed to the feeder cattle, as the Canadians' infrastructure can only handle a certain number of cattle. Moving forward, a stronger U.S. dollar relative to the Mexican peso and Canadian dollar can encourage live imports. Continued availability of U.S. cattle and steady to expanding beef cow herds in both north and south of us may limit the need of the U.S. to increase cattle imports. The price spread between the market prices will play more of a factor on whether 2017 will see more fed or feeder cattle imported. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the risks are high, but the opportunities have never been greater. So how do you sort through it all to decide which way to go? For more than 40 years, CattleFax has led the way. Become a member at www.CattleFax.com. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, and our focus is you. CattleFax, the deciding factor.